Ladies and gentlemen, we are back with SPDas. This is New York Part 2, Elliott Wave Theory Trading, whole different perspective on the markets. It's Friday. For some of you, it's already the weekend. The charts are still alive. The futures are alive. The crypto charts are alive. Digital assets alive. We keep trading, keep analyzing multiple market perspectives, different trading styles, just for you, for you. Please hit like on the stream, repost it to your trading friends. Let's get the session going. SPDas, the trading floor is yours.
All right, thank you, Igor, and welcome back, everyone. We are touching base with the last session for the week, 9:30 a.m. Eastern, just about 9:30 a.m. Eastern now. And before we come back, Tokyo Sydney overlap on Sunday. So I was just while Igor was addressing, I was just setting up the Euro USD hourly chart. The first thing that we had seen in the past session is that it has picked up it has taken up the 500 mark, just past 500 mark, and it's now pulling back. But what I wanted to show you, what I want to actually, what you should be making a note here is both the trend lines are taken out. The first one after the 20th breakout, all right, and the second one, I think it's being tested right there yesterday. There could be, so that's a breakout, just a breakout, correct? And so possibly there could be a test, maybe one more high and then test, back test the trend line, and then resume its rally. This is what looking like the most probable wave direction now. All right, now let me zoom in a bit and doing the wave counts for us. Ideally, it looks like the third wave might not be extending right now. We will come to know very soon if the third wave is extending or not. But tell you what, one thing is clear that the euro is out of the sell zone. It's just entered the buy zone of both the trend lines, and that confirms. I think we still don't have a top here, and that confirms that our trade direction is absolutely on target, and the only thing we need to do is just hold on to the longs that we have taken aggressively, as well as I think around 250, 60, and possibly around 70 as well. All right. Let's take an extension, because I think if the third wave is extending, then it's going to not look back at all from here. So the only thing that I'm suggesting is the longs that we have taken, under no circumstances should you take complete profits out of the desk. You can keep booking partial profits. For example, uh, it's one, two, three, four, and maybe one more high, five. Okay. The moment it hits the fifth wave, uh, it's showing somewhere around the 520 or 530 zone. Remember, we have a resistance coming around the 547, if I remember correctly, over here. You have we have okay. It's right at the same price. It's right at 530. All right. So if even if the third wave is extending, then it could be wave one, wave two. Uh, I think it's not going to stop at 530 if wave three is extending. But we are giving it a chance of the initial five waves kind of completing around either 530. Ideally, I think it should go around 600. The reason why we are saying it should go around 600 mark is that is a daily chart resistance. It's a resistance on the daily chart. There you go. In fact, it's a second resistance. We've got the first one out already, but it could possibly push towards the 630 mark before a pullback occurs. And the reason why I keep saying that we need to see a pullback, we need to see a pullback is that the boundary on the daily chart is just about a straight line. And normally, I'm just changing the visibility quickly so that the daily chart clears up. Right, the daily chart is a straight line right now. You see that? And and what happens is a few days of small wave action on an hourly or 4 hourly chart brings up one wave of a large degree on the daily chart. So let's say this is going to be like the first wave of a minute degree. We should be having a wave 2 of minute and then 3, 4 and 5. Okay. We are just waiting for the first wave at minute degree to complete on the daily chart. And if what we've done is correct, then ideally early next week or maybe the entire next week, it sets up, the pattern sets up perfectly well. It fits in perfectly well. Today is Friday. It closes wherever it wants to. Starting Monday, it begins to retrace or begins to produce that wave 2. So the path that it should take is something like a wave 2. It could take the entire next week. So next week could be a corrective drop, and then it pushes through the third wave. Now, believe it or not, this wave ideally should be extended. If you go by the history, you see the second waves, that's the first one, this is the second one, and then you see that extension coming through nicely. So that's what I'm saying. It's possibly the third wave should be extended, and with all these potential wave theories or wave counts, uh, we expect Euro USD to make a near-term top very soon. We don't want that on a 15 minutes or hourly, all right? So you can actually set up what you want to see on the daily chart and what you want to see on the 15 minutes or hourly chart so that it doesn't interfere, all right? Okay, so that is what we are looking for, a top and reversal for the next week. So next week should be kind of a retracement for Euro, and let's figure out where could be the next potential trade entry. I'm taking a hypothetical extension around the 530 mark. So next week we are looking for an ABC decline to come and test around the 315 mark. And that should be good news for those who are still looking to buy or re-enter or to enter for the first time. So next week we prepare for us for the story to come lower towards 315 or 300 mark, and that would be an amazing place to re-enter on the long side. All right, so first five waves on the lower degree are just about to get complete, and let's go back to the dollar index now. With this analogy, we just need to flip the direction for the dollar index. So we've got wave one, two, potential wave three down there, four, and we're now looking for the fifth wave. Now, one more interesting fact is that the third wave cannot be the shortest one. So we will have to see if this wave is the largest one, or because the third wave cannot be the shortest one. If it happens that way, I mean, I have not counted pips for the first wave and third wave, but it looks like the third wave is slightly lower or lesser in price than the first wave. So the fifth wave should ideally be lesser than the third wave. All right. So we look into that on Monday or whatever. The only thing is, if uh, the fifth wave that we are proposing right now is turns out to be larger than third wave, then we'll have to restructure the counts. That's all. That means the probabilities are the third wave is extending. That's all right. So no big deal, but the direction is more or less confirmed. I need to just change the degree here. Minute, and we are good to go. And let's also find out the extensions. So if it kind of drops or it could be complete actually. We are not able to see the sub wave here. I think if we go back to 15 minutes, can you see wave one, two, possible wave three, four, and five? So it could be complete as well, right? So uh, sometimes on the larger degree time frame, we cannot see the exact subwaves. So that is okay. The fifth wave is either complete or just about one more low. And if what we've done is correct, then we are now looking for a rally to materialize soon towards. I'm just making sure that these waves are not visible on the dailies because it won't be conducive for us to judge what the daily chart looks like when we come back. All right. So I think we are good now. And the wave structure for the upcoming wave structure should be like A, B, and C. All right. And that would be larger degree wave 1, larger degree wave 2, that is minute wave 1, minute 2, and then minute 3 going lower again. You know what, this structure is falling in line with the eyesight that I like seeing the structure. Why? Because uh, basically my personally I'm a very good, it's favorite, these four pillars are my favorite. You call it candlestick pattern, which I'm not using right now, but support, resistance, Fibonacci, and waves. They're the all-time favorites. You don't need any other indicator. So the this support is gone. All right, both the supports are gone. I mean, let's say this major support is gone, 107.50. So by rule, when we are in class, with what we say is when the support is taken, that bears have scored a low, they score a point. All right, like a game of football where you score a point after uh, uh, hitting a goal. All right, you score 1 point. Similarly, bears have scored 1 point here. So after the point, they take a break. So bears will leave the market, and when bears leave the market, bulls take over, and bulls will push the markets higher. That's what is the human analogy of support break and a resistance break. So it falls in line with thinking, actually, the conventional thinking. All right, but overall, dollar index, a larger degree trend has turned potentially lower, and with a stop loss of 110.30, we've got to finally remain short, and we should be getting another entry point possibly next week because it's going to take three waves, right? A, B, and C. So it should be around 109 by the next week. Let's see. Okay, if one more confirmation. All right, if that was fifth wave, we still have a divergence, but let's say it drops yet another low. It prints yet another low while we are in the session or just after that, around 107.12. Just watch this RSI. It's going to be good bullish divergence. And that's how you pick up trades actually. You see that the angle is so shallow. And if even it drops to 107.12 or 107.05, that RSI would still remain higher than the previous low. That's where you pick up the turn. That's where you identify the turn at the end of the fifth waves and go on the opposite side or go towards the other side. And believe it or not, I'm not exaggerating when I say it's never, I don't remember a situation when we've dealt with the risk management properly and taken or suggested a trade based on the RSI divergence where money was lost. It's it's as simple as that and very powerful actually. All right, one more beautiful story which has just taken. I think our profits are booked, brothers. For gold, target was 2785, and it has just managed to touch 2785. Can you believe that? But I would still say it is 2788 or 2790, but 2785, our conventional target, has been hit. So we are out of the aggressive long call. At this point in time, we are flat. Now, either we either we go aggressively short just around this price, or we'll have to figure out if it's good to go short at this price. But first, let's have a wave count. So the question here is now, uh-oh, uh-oh. The question here is now, have we completed wave B minute degree, and are we going to resume wave C anytime soon? All right. And the answer would, let me, before we take that answer, let's also look at the parallel channel. Look at that. That's why I keep on saying trend lines are just like human touch. I mean, it's touched the trend line. I mean, and don't be surprised. I would not be surprised at all if it just breaks that trend line and comes back very sharply. We've 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 hit the trend line, so it's just about time for a major turn. And what tell you what, uh, the kind of trader that I am and I execute or I guide, the grace of God, it's slightly on the aggressive side. So I'd like to take some risk over here. All right. But what I'm looking for is a pattern. It's not there on the 4 hour time frame. It's still not there on the hourly chart, but we have it on the 15 minutes time frame. That's an engulfing bearish. And I think, okay, that is enough. The only thing we need to figure out is the risk. Okay. And this is an aggressive one. All right, one more proof. Let's do that. This is so exciting. Uh, we've time and again discussed that the fifth waves are divergent waves, correct? Look at that. There is a divergent scenario here, previous high and the new high just below that. We flip the chart to a 4 hour and this one is lower than that one. All right, so I'm not going to waste time here. I'm simply going to type in an aggressive short. Aggressive short taken around 277880 to stay away from the noise. Now, what I've suggested is we keep the stop loss above the previous high. So I'm going to take it at 2820, 2820, or maybe even better, 28. Let's because we are taking an aggressive shot, right? So let's keep it at 2801. If we get tipped out, we get tipped out because it's an aggressive trade. Okay, and target, or let's figure out the target. Immediate target should be wave forward low. So that is around 2736. That's a short-term target. All right, and and for the long term, it's the next one is around. So let's forget about the next one. It's a long term is open for long term, for medium term, let's say, towards 2500. All right, and let's see how the price action is now shaping up. We are selling on a divergence. It gives me a lot of confidence to do so. When you are selling on a divergence or a buying on a divergence, the situation itself is uh, confidence boosting. So it's 89. We are quite comfortably above that 89 high, 2801. Good enough. All right. So that's the trade setup. See, both the plans that we did for gold have executed. One was an aggressive buy call, which is successfully completed now. And the other one was a potential aggressive short limit order around 85.90. That is also triggered now. All right. Should be good here. All right. Let's get the Dow. I think these sessions are all recorded, so these trades would be quite meaningful, even if you're not trading and just watching and keeping note of what's being discussed here. Do you remember Wednesday when we were here? We were talking about we still have 3 trading days, full 3 trading days to go, and it's going to kill time or it's going to take time until Friday. Logic behind what we were discussing and what is happening with the respect to price action. Every single instrument that we have analyzed right now, we are going to three. We are going to see coins now. Even those should be around around a potential turn or just about near that. Okay, I forgot the degree here. It's going to be minute. And what we are now looking for is a 345 lower. All right. But you tell you what, that pattern is not confirmed yet. At least on a shorter time, it would be confirmed. But I'd love to see the daily chart because there should be a shooting star up there. If bears are going to come back in control, they should be producing a doji or a shooting star. And if they're too aggressive, that would be an engulfing bearish by the end of the day. We still have a few hours to go before the NY ends. Right now, it is just a small body. Uh-oh. So today, high probability remains for this candle. I mean, if it drops all the way down towards 44,100, then it's perfect engulfing bullish. Whether it's going to tank 3,000 points, 300 points, it's not a big deal for Dow Jones to do that. But if it doesn't, and if it produces a doji or a hanging man right here, we are set for Monday. All right. So maybe we can do another session tomorrow, a quick session around the London time, before or after. We will we will make an announcement, and we can see what's at the Friday close, and that would help us prepare on Monday. All right. So Dow Jones quietly setting up. I mean, and we also discussed this rally, if you remember. That story was covered completely from 13th of January. We were time and again saying that it's going to be a rally. We don't want to get into this rally intentionally. This rally is going to be very fast. It's going to be very fierce. Most of the traders are going to feel that the uptrend is back and they would get on the bull side. But tell you what, this rally would be a bull trap. We have discussed this story all through 13 January and further. So that's what has turned out to be. I can count the sub waves like football: one, two, uh, three, four, three, four, and five, and then a three-wave corrective decline. That is wave B. And again, you have one, two, three, four, and five. So it's a 5-3-5 structure. Clearly, an ABC. Ideally, prices should reverse very sharply from here. I would not be surprised even if it drops and confirms an engulfing bearish on the daily chart. It sets up the stage for Monday, most instruments. Let's pick up the coins now. Okay, they are taking their own time. I don't know why, but 105. You know what? If I would if I would personally looking into this trade, I would not go much longer on the long buy side. And even if you're going, brothers and sisters, please break even. Put your stop at a break even or just below that 99 mark at the minimum risk. Should not be taking much risk. But you never know, the coins behave the way they want to. It's not that if the risk assets are topping, then the coins will also top it. It can be 1 or 2 days here and there, but probably if you compare with the risk assets and the technical wave five, then the upside is still there, but we should be very cautious towards it. All right. I'm not saying you should exit, but at least be very cautious with your stop loss. Don't take that lightly. Ethereum is again a break. It's already broken out. It's a breakout scenario here, unless it's forming a triangle after this five-wave lower. All right. So the story is same for Ethereum. If you want to book profits right now, Friday close, do that. We'll find out trades on Monday. That's what we are here for. All right. I mean, if you're getting, or you can take maximum profits, keep a small position open in the coins because they are taking a long time. And sideways consolidations are such that they take long time. They will always test our patience. Okay, I think Solana has inched quite a bit. 49, we were 49. We bought around 49, somewhere here. Okay, it's not too much, the 268, but very close to a breakout. So maybe you can just revise your stop loss, or you can place your stop loss around 229. When it breaks higher, it's not the right technique, but just after it breaks higher, maybe you would want to come to a break even or reduce your risk further. That's a good strategy. I think Ripple should also be sideways then. It is sideways, sir. So no change in the coins. Either you stay put with the recommended stop losses that we've been discussing, or you book partial profits. But please handle the risk management risk properly. Don't let the stop loss open. All right. And with that note, we come to a pause for this session, and we'll be back again. If you are scheduling another one on Saturday, we will touch base again tomorrow, or regular Sunday evening Tokyo Sydney overlap. And back to you, Ego. Thank you all for joining.
SPDas, always a pleasure. Thank you very much.
Thank you.
With that, we wrap up the final trading session of the week. And thanks for tuning in for all these days. Please, we would appreciate it if you leave a like, a repost, get the word out, or help get the word out. We're coming up with a community update just a little later on today, as well as some of the updates across the ecosystem. So you'll be able to see those for yourself. Of course, just a lookout for that community update, and everything will be in there. Looking forward to next trading week as well. And of course, if you're just tuning in for the first time, just check out solana.forexlens.com to get more information and scroll through some of our older posts on X. And please read the white paper. Anyways, we're super excited to have you here, and yeah, looking forward to another trading week coming up. You know what to do this weekend. We've given you all the details surrounding the pairs from both IT Trader and SPDas. So yeah, we'll be back with the schedule on Sunday evening at 7 p.m. EST, and that would be a Monday night or early morning at 12 a.m. GMT. I'll have that schedule posted for you shortly. Thanks very much, and take care.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.